And we got some juicy information today that I'm going to share. Have your pens and notepads ready because there's going to be a lot of info today. I'm going to try to break it down as simple as possible. Let's start by watching this video.
Commissioner, Mr. President, I rise again, I'm afraid, to make the same old hoary speech that I've been making here for several years. And that is, it is my opinion that you do not really understand the concept of banking. All the banks are broke. Bank Santander, Deutsche Bank, Royal Bank of Scotland, they're all broke. And why are they broke? It isn't an act of God. It isn't some sort of tsunami. They're broke because we have a system called fractional reserve banking, which means that banks can lend money that they don't actually have. It's a criminal scandal, and it's been going on for too long. To add to that problem, you have moral hazard, a very significant moral hazard from the political sphere. Most of the problem starts in politics and central banks, which are part of the same political system. We have counterfeiting, sometimes called quantitative easing, but counterfeiting by any other name. The artificial printing of money, which if any ordinary person did, they'd go to prison for a very long time. And yet governments and central banks do it all the time. Central banks repress the amount of interest that rates are, so we don't have the real cost of money. And yet we blame the real retail banks for manipulating the LIBOR. The sheer effrontery of this is quite astonishing. It's central banks. It's central banks that manipulate interest rates, Commissioner. And plus, underneath all this, we talk loosely, in a rather cavalier fashion, do we not, about deposit guarantees. So when banks go broke through their own incompetence and chicanery, the taxpayer picks up the tab. It's theft from the taxpayer. And until we start sending bankers, and I include central bankers and politicians, to prison for this outrage, it will continue.
Yep, that was it. Just a sec. All right, my people. Let me see that I look good in the camera and you can hear me good. You guys hear me, right? Perfect. Thank you, Keisha. All right, so first a little background story to this. I don't even want to call it a training. This is going to be a blast of information, is what it's going to be, a webinar. Yeah, what's up, Rolf? So therefore I'm saying have your pen and your notepads ready. And why this webinar here or training, call it whatever you want, is so important is because the times that we're living in and the things that is happening right now is things that you're going to be talking about 10 years from now, maybe 20 years, 30 years from now. Your grandchildren will hear about it because we're going through a total financial reset. And it's like we talk about that term, financial revolution. Trust me, it's happening. And it's massive. It's on a whole nother scale. So background story. I wanted to do a video because I'm trying to get my YouTube channel to blow up. And I noticed that this whole banking situation is trending now. People are searching for it a lot. I want to find out information. And I find it also very interesting. So I started to dig into it. And I was thinking that I'm like, let me do maybe a short or a 2, 3, 4 minute video. Guys, I have material now to do an hour of video. So it's a rabbit hole that I really got sucked into. And I'm glad for that because it gave me a lot of awareness of stuff. And I just wanted to find out how these banks collapse and is it possible for other banks to collapse? But when I dug into that, I found that everything is looking like a conspiracy. That's why I call it the Bankspiracy, all right? And then after that will come another video. It will be called the Grandspiracy because actually I see a conspiracy on a whole nother level. But let's start with the banks. So, guys, first and foremost, for you all to understand this webinar here, for you all to understand the information that I'm going to share, you need to understand what fractional reserve banking is. And type a 1 in the chat box. I want to see where you're at knowledge-wise. So type a 1 in the chat box if you know what fractional reserve banking is. Type a 2 if you don't know. All right, okay. Cool. So I'm going to explain it. Fractional reserve banking is actually very complicated. It's like mathematicians that have come up with it, and it's a genius system. But to explain it very, very simple, and what I'm going to do is I'm going to take up my, I'm still sharing screen. I'm going to bring up the whiteboard. So that we can make this a little bit visual. So, yeah, all right. Fractional reserve banking. So let's say I go to the bank and I deposit 1,000 US dollars. I see your, as you call Eric Ray and everybody on this whiteboard. I think it's a shared whiteboard. I don't know how to unshare it, but anyway, it doesn't matter. So I go to the bank, I deposit 1,000 US dollars. Fractional reserve means that the bank only has to keep a fraction of its money in the bank. So the normal rule is about 10. So it means like for every dollar that is deposited into the bank, they can lend out $10. All right, that's fractional reserve. Full reserve banking is that they must keep every dollar that is deposited into the bank. They must keep it in the bank. It must be there. If I go there and want to withdraw the money, if everybody comes in the same time want to withdraw the money, no problem. Here's the money from the vault directly. But our system, our global financial system, is run by fractional reserve banking. Fractional reserve banking means that I can come deposit 10,000 USD, and the bank can now lend out 10,000 USD. They can 10x that. This is how money is made. This is how money is created. Let me turn off my Telegram so it won't bother us. Yep, like that. So they can lend out 10x the money that I deposit. Now, look, I've deposited 10,000 USD. In comes Keisha, and she wants to borrow, let's say 5,000 USD from the bank. Borrow. Deposit. And take notes on this if you don't know this, because, and ask questions if you don't understand, because this is super important for you to understand. Because what are we in? We are in the business of trading money, trading currencies, trading forex, trading crypto and whatever. And this here is the whole backbone to what we're doing. So you need to understand the system. How is the money made that you are trading, right? Now, I've deposited 1,000. In comes Keisha. She wants to borrow 5,000. Cool. The bank lends her out 5,000 from my 1,000. Keisha goes to the, I wanted to say the barbershop, but let's say she goes to some very luxurious manicure and pedicure that costs $5,000. She goes there, spends all $5,000 on manicure and pedicure, and the owner is Lara. Let's say Lara. What does she do? She takes the 5,000 that Keisha just spent there, and she deposits it also to the bank, and the bank can now lend another 10x on those 5,000 that they put in. Now, I don't know if this makes sense, the explanation, but if it does, do you understand what kind of pyramid scheme this is? Not even a pyramid scheme, it's a Ponzi scheme. So it means they can, I deposit 1,000, somebody else comes and borrows from my money that is deposited, but even more than that, because the money can, the banks can actually not print money, but they create it digitally, and they get it from the central banks, from Federal Reserve in the American case. So I deposit 1,000. Keisha loans 5,000, which is made from that 1,000 that I deposited, and the bank actually still got 5,000 left that they can use. Keisha goes and spends that money, 5,000. Those 5,000 now is reinvested into the bank or redeposited into the bank by those that received it when Keisha spent it. Now the bank can again loan 10x that money that is deposited. Are you guys with me? So type of one in the chat if you understand this. It's quite hard to explain. Yeah, good, thank you. And do you already now? Do you understand how fragile the system is when it's built like this? So what does this mean? This means that if everybody that has deposited money into the bank wants to withdraw their money doesn't exist. The money is not there. You understand? So therefore, the term bankrun. If everybody comes and want to take out the money, banks collapse because banks doesn't have that type of money. Now we only talking about $1,000 and $5,000, but what about those that deposit millions into the bank? Understand? And there are even those that deposit billions. So because you got to understand the banks invest into each other, institutions deposit, like institutions also got to have money in some type of vault, bank or something. So it's a big deal. And that sets already the foundation for how the system is built. And it shows how fragile it is. And it's starting to get exposed more and more. So how does this how does the system stand up? And how can this not have cracked long time ago? It's because it's all built on trust. And here comes the very important thing. For there to be trust, you have to be fed the right information, right? So if you are being programmed and told all the time that it's cool, we have the most solid system in the world, banks are rich, they're making a lot of gains, this and that, you think it's cool, it's solid, my money, and bank save your money, like they always shouting out or proclaiming that you should save your money. Of course they want you to save your money, because then you deposit money in the bank and then they can make more money out of the money that you've deposited. But the thing is, they need to program you to feel that the banks are safe, and that's like anything else would be criminal to do, not to have your money in the bank. How can they do that? The same people that control the banks are the same people that control the media, the big media companies. I'm talking about BBC. Sorry, I don't have all the information on that actually, but that is the next step in my research. But I know that for a fact actually that the same families and can say organizations that control the banking system control the media system as well. And here comes the third part to it. They control the school system as well. So here comes the answer to why you are programmed from school already to save your money, deposit money, trust the banking system, and you don't learn about what money actually is. Why don't you know what fractional banking, reserve banking is? You should know it. It should be common knowledge, but you don't know, because you don't learn that in school. That's why you're here with me now, and now we're learning it. All right, cool. So this is the foundation. I want you to understand this now, because otherwise you won't understand what is going on in the markets right now. Okay, so let's talk about bonds, the bond market. This is also very important. and it goes along with the government's printing money. When they print money, they issue bonds. I hope you guys got your coffee ready. This is a coffee day. If you've been on my trading streams, then you know I'm always keen with my coffee. All right, so let's talk about bond markets. So that's the next step. Now, bonds. Bonds, let's say bonds are like the safest asset you can hold. All right, so you hold a bond. Let's say it has 1.5% yield, which was the case a couple of years ago. I don't know what it is today actually, but it was a couple of years ago. And let's say you have a bond that's yielding 1.5%. What does that mean? That means, and let's say it's a 10-year bond. It has 10 years to maturity. What does that mean? That means that you have some form of asset that is yielding you 1.5% of what you bought it for. Let's say you bought it for 1 million. Because that is actually a realistic number in these cases, USD. Let's say you bought it for 1 million. The yield is 1.5%. It ain't much, but now the thing is like this: if you are offering interest rates to people at about 0.5% on their deposits, then you're actually making money out of this. You take that money that people are depositing and you buy bonds with it. So they deposit money into your bank, you give them 0.5%, then you take their money, you buy bonds with it that yields you 1.5%. You understand? So this is how they make their revenue on that, and of course on interest rate by loaning out money to people. So, and of course trading the markets. So now they have a 10-year to maturity. I don't even know how that spells, but I think it's like that. And that means that in 10 years from when the bond got issued, you get your $1 million back, and that's it. And of course, during those 10 years, every year you have got those 1.5%. So and when it's mature, when the bond has matured, you get those 1 million also back that you paid for the bond. Okay, cool. No problem. Now, bonds, this is how they do, bonds, banks, this is how they do business with each other. This is how they borrow between each other, and they give these bonds in between as a IOU note, basically. Now, here's the problem. Here's how this whole situation came. We were, let's go back in time. Let's go back to January 2020. COVID was just a thing. People were talking about COVID, but not as much. And it was like we heard about swine flu, bird flu, and I don't know what. And so COVID was just another of those things. And we had an inflation that was under 2%, and also historically low unemployment. Now I'm talking about US here, but it kind of sets the tone for the rest for the rest of the Western world, like Europe, for example, where I live in, because the economy here is very similar to US. So that was in beginning of 2020. Now what happened? COVID came. It struck, panic, fear, people cannot leave their houses. In that panic and fear, what happened? People started to sell off their assets. Like you saw NASDAQ, S&P, everything was dumping. In Bitcoin, whatever you wanted, everything was dumping. Everybody sold off the assets. So when everybody's selling their assets and want to keep it, what do they keep it in? They keep it in US dollars, because US dollar at that point was the safe haven, so to say. So they keep it in US dollars. Now, the problem with this with the situation in the markets as it was that Fed had to do something about it. Fed had to get the money velocity rolling again, get up the money velocity again, because the economy stopped. So nothing was produced, or not as much was produced, and nothing was consumed. And that's the most important thing, because we live in a consumer economy. So Fed started to cut rates. They started to cut rates, which is called quantitative easing. And when they cut rates, they made it very, very cheap to loan money, and also to borrow money, of course, and it's not worth to keep your money in dollars anymore, all right, or deposit your money in the bank, because the interest rates you're getting back is not worth it. So what do people do when they have a lot of dollars and they can borrow dollars and this and that? They start to invest into companies, they start to invest into stocks, start to do stuff, or they start to spend stupidly on whatever. And this boosts the economy, of course. The economy is rolling again now. Now, when that happens, money flows through the economy and comes right back into the bank. All right, and this is always the goal, because the banks run this world. They want to have this the money. They want to control the money, and through controlling the money, they control the world. So, economy boosts, more money into the system, and that's that. Now, we're coming into first quarter of 2022. And suddenly we see that we have a inflation rate that has gone up to about, I think it was 5% at the first quarter of 2022, about a year ago. We're in a 5% inflation rate. How did that happen? Yeah, of course, because we printed so fucking a lot of money. So there's so much money out there now. So prices goes up as well. So now we have a inflation situation. So Fed realizes, okay, we need to deal with this somehow. Let's raise the interest rates. This is always how to deal with inflation. Let's raise the interest rates so it's more worth for people to have the money in the bank. All right, there's not so much money out anymore. Money flows right back into the bank now. It's called quantitative tightening. And when they started, and they raised it very aggressively. So within a year, they raised it to from 0% to 4.5%. That's a major, major difference. That makes it very attractive for other countries to hold American government bonds, because suddenly they're getting 4.5% yield on it. Now, the problem is, this is a massive shock for the economy, for the system. So remember, we spoke about this, the bonds. I've bought bonds. Now let's talk about the Silicon Valley Bank. This is exactly what happened to the Silicon Valley Bank. So Silicon Valley Bank has a lot of bonds now. They have invested in a lot of bonds. They have this 10-year bonds, and they're yielding 1.5%. And this is also important to understand. Why did it buy so many bonds? Didn't they understand that Fed were going to raise the interest rates? No, because Jerome Powell said that interest rates is not going to pass 1% for years to come, is what he said. So he gave them false hope. Intentionally or unintentionally, I don't know, probably unintentionally. So they buy bonds because they're thinking like, okay, Jerome Powell promised us that interest rates won't go above 1%. So it's still worth for us to buy bonds at 1.5%. They're stacking up these bonds, and now they have a balance sheet full of assets that are these bonds. Problem is now, Fed is raising the interest rates, raising. Suddenly it's 2%, suddenly it's 3%. What does that make these bonds? Bonds, not worthless, but it makes them very less worth than those, let's say, $1 million that they bought it for. So let's say they want to sell those bonds. Let's say Silvergate Bank, Silicon Valley Bank wants to sell these $1 million bonds. Nobody wants to buy them. So maybe I'll be like, okay, you know what? But Fed has raised the interest rates. They will probably raise more, so I can buy it and hold it till maturity, because then I know I get my money back. and I buy it for $500,000, so $600,000 instead of $1 million. Okay, so bonds have lost their value, and you have a bank vault full of these bonds, and which means that your balance sheet is losing value. Actually, it isn't. This is how banks work. This is why it's so corrupted. So banks actually, this is not a loss until it's realized. Just like trading, it's not a loss until you realize the loss, until you stop the trade. All right. Same thing here. When do they have to realize it? They have to realize it when they're out of money, and they have to like actually get some money so they can pay back the depositors, or they can hold it till maturity. Then they will get the full money back, but that's 10 years from now. So in Silvergate and the Silicon Valley Bank, what happened was some people started to realize this thing, and media was spreading some FUD. Coincidentally, it's a crypto bank as well, so it's a bridge between exchanges and crypto. Silicon Valley Bank, Silvergate, and what was the third one? I forgot his name. But anyway, so maybe somebody knows, can type it in the chat. But now people come to Silicon Valley Bank and want to withdraw the money, want to withdraw higher amounts, and Silicon Valley Bank can't give them money. Number one, because fractional reserve banking, they only have 10% of what people have deposited, right? Number two, they have invested into these stinky assets, these super secure government bonds, and they are almost worthless now. So they have to sell them off for shit money, and through that pay the depositors back. When this started to happen, of course, it's a vicious spiral. The word, like, bad news spreads very fast, and people start to realize, oh shit, like Silicon Valley Bank is insolvent. We need to, I want to withdraw my money. And then that's when they closed. And now they are bailed out, basically. Did you understand what I just, like, why Silicon Valley Bank collapsed? Did you understand what I just spoke on? Give me one in the chat. Yes, perfect. Thank you, Keisha. Okay, let's go to the next. The thing is, I have so much, so I'm trying to like just take the juiciest parts. I'll break it down really good in the, I'm breaking it down really good in the video that I'm doing, but it's a lot of information to break down. All right, so, and by the way, we're talking about the US market now, but trust me, the European is in no way better, and the Asian is in no way better. This bank runs going on in China now, crazy bank runs. You have I don't know, this chaos going on there, or there was. I don't know if it's still going on, because China censors a lot of the information going out, so you don't actually know exactly what's going on there. But I know there were some major bank runs. Like they were even placing tanks in front of the banks because people were getting crazy and wanted to storm the banks. But China, Russia, Japan, Europe, Sweden, where I'm from, where I'm raised, which used to be famous for being the most secure country, it's in chaos now. It's like it's a real depression setting in there. Now, let me just backtrack a little bit. Bankrun. Yeah, all right. So here is the thing now. Okay. This is how we come into the whole Bankspiracy thing. So this is where it gets very interesting. And if at any point you want to ask something, or you want to say something, unmute your mic or type it in the chat, because love to hear other people's opinion. Maybe you guys have info that I don't have. So I would love to take part of that. All right, so you guys heard about CBDC, right? Now, look at this now. I'm gonna explain something. This is, I will try to explain as simple as possible. So I told you that the same people that control the bank system control the media system. When I say the bank system, I mean the system. I don't mean the small commercial banks that you guys have on the street or something like that. I mean the big banks that control the whole system. JP Morgan, sorry. What's the other ones when it comes to US? JP Morgan. BlackRock doesn't count in because BlackRock is an investment bank. It doesn't operate in the same way. JP Morgan is one of them. Wells Fargo is one of them also. Bank of America. Oh, no, I forget. Bank of America. So they run the system and they run the media as well. They control the mass media, the mainstream media. Now, normally, when there's a problem in the banking system, it gets kind of censored. Like they don't want the information to come out, right? Because they don't want to panic in the system. This time it was different. It got like all media was talking about it and reporting about it. And when they talked to Larry Fink and what's his name, Jamie Dimon, the head of JP Morgan, which is, I would say, one of the most powerful people, I don't know if in the world, but in the US, definitely. He has a lot to say. And like the president talks directly to him and Larry Fink. So these guys are powerful on a whole other level. Now, this time was different. They started to spread fear. Larry Fink even said, I don't remember his quote, but he said something that this can actually escalate. When do you ever hear a banker like install fear into people and say like, yeah, this can get worse actually. Just so you know, this can get worse. You better withdraw your money. This is what they did. And when they did that, this was the first awakening call for me. I was like, why are they pushing fear? Like they're sabotaging for themselves. And this is what I understood. Like these big banks, they don't own the small commercial banks. They do business with them, but they don't own them. Now, the Fed is also a private company. I think that everybody here knows. If you didn't know, now you know. And the Fed, JP Morgan, Wells Fargo, Bank of America, and not only that, the lawmakers in the US, so I'm talking about SEC in them, and the government, the regulators, SEC, and the government, all of them are in bed together. So they are they're all sleeping together. But this is what it is. They meet regularly. This is facts. They talk regularly. They advise each other. And the thing is, now this whole the big shot, and you will see that all that happened was covered up until now. Yes, thank you, Town. Exactly, and I've been saying this ever since 2008 that this thing is just going to blow back a lot harder. It's going to come back. Now, here's the thing: money is power. Banking system is power. Problem is that those that have the power are slowly losing the power due to social media, due to cryptocurrency and stuff like that. So now they want to regain the power. Now we can talk about COVID and Ukraine war and a lot of other stuff that is means of weapons for them to regain power, conspiracy theories. But let's stick to banking system. And they need to get back the power. So the best way for them to get back power is to totally centralize the whole banking and money system. So it is centralized. Yes, it is, but not in the way that it's going to be, because now you have commercial banks everywhere. And as long as you can get a commercial banking license, you can open your own commercial bank. Now they want to centralize this. What is the best way to centralize this? Is to run these commercial banks to the bottom, so they are forced to liquidate, and then Fed, JP Morgan, and all of them steps in like the savior in a shining armor, big ass white horse, and saves the day, right? They stop printing money, or they bail out or whatever. The thing is with these bailouts is that now suddenly these banks belong to them that bail them out. So JP Morgan is pushing in money into these different banks. But not only that, people that have money in those banks, so they are pushing fear. People panic, they take out the money from Silicon Valley Bank, from Silvergate and whatever, and they put it into American Bank, Bank of America, to JP Morgan and them. Especially those that have big money. They're not insured and covered by these $250,000 that the insurance covers. So they withdraw the money from the commercial banks, they deposit them to the big banks. Now the big banks is getting all the bucks. Finally, those small banks, commercial banks, have to liquidate. JP Morgan comes and scoops it up, or Fed comes and scoops it up. And this is how they take full control of this. And now look at this. Coincidentally, this is happening. You see media's pushing fear as shit. And in the same time, coincidentally, what is? Fed comes out and says, yeah, in June, I think it's June or July, right? In the US, we launched the CBDC for to save your ass, so that you are better protected, so that they can control monetary policy in a better way. Now, we all know that that is a whole lot of crap. So the CBDC is the total form of control. When people think like, okay, shit, banks is not good, we lose our money, we scared as shit, what should we do with our money? Fed comes up with a solution, which is CBDC. Now suddenly it sounds very attractive to have it. So people start to run to CBDC and use that instead. When CBDC is installed, that is when you have totally lost your control over your own, not only your own private finances, but basically over your, I won't say private life. Why is that? Because imagine you doing a comment on IG, on Instagram, that was not appropriate, or somebody didn't like it. They can only freeze your account. They can freeze your money, or they can be like, oh, you are fined $500 for doing that comment. Those $500 are withdrawn from your wallet directly. Like, as they say it, it's already withdrawn. Understand? So they have full control of your funds, your taxes, everything will pay directly. They see every single penny that you spend, because now we don't have any cash anymore. All we have is CBDCs. So this is how we're spending our money now, right? So they have full control of every money, every penny you spend. So your privacy there is gone. And there's a lot more to it. There's a lot more to it. They will control you with that. So I see, I will break it down much better in the video. It's a little bit difficult to break it down like this, but I think most of you get it. But what I see, the picture that I see from all of this is that this whole thing is a conspiracy between Fed, the big players in this whole banking system, and also the regulators. I'm talking about SEC, of course, and the United States government. And this is all about control. This is not about greed. A lot of people think that it's about greed. We need to get more money, this and that. No, this is about control. They're trying to regain control. And I'm gonna end this by saying something more. This is also another video coming out. BRICS. Do you know what the BRICS nations is, or the BRICS coalition? Type of 1 in the chat box if you heard about BRICS. Yeah, Everett. Nice. So the thing is like this: America is losing power, and believe me, I'm not an American hater or something like that, trying to criticize US. Sorry, Rolf, I know you're from Miami, but my mom lives in the States and she's a US citizen, so it doesn't make sense. But I will voice my I will criticize whatever is corrupted and, sorry, part of my language, but fucked up. And the US government, the US policies is fucked up. It has basically ruined big parts of the world, and people are getting fed up. Sorry, not people, countries are getting fed up with this. Governments are getting fed up with this. So some countries formed something called the BRICS nation, and it started with India. Correct me if I'm wrong. India, China, and Brazil, I think. today, I know at least it's South Africa also. The Arab Emirates has applied, and remember now, America has big debts. They owe a lot of money to different governments, and one of those, two of those governments is China, the Chinese government. They hold a lot of U.S. bonds, and the Arab Emirates, so Saudi Arabia. So, and these countries are now allied suddenly, and are forming a coalition, and they formed something called BRICS, which is like EU, like the United States of America. It's a zone where they can do business between each other without with special tax or tool laws, custom laws, and this and that. So to enhance business between the countries. Now, here's the thing. US dollar has always has for a long time been the world number one, or the world reserve currency, right? Even though they took it away from the gold standard, it's still the world currency, the US dollar. Now the BRICS nation are creating their own currency, which very likely will take over as the world currency. Their currency is backed by gold, copper, I think it was uranium also, and I don't remember more, maybe silver and stuff like that. For any country to be a part in the BRICS nation, you have to actually contribute. Like, let's say I want to be a part of the BRICS nations. I have to come with a pile of gold or something to get a certain amount of that world currency. So it's backed by something. It has real value. And in the same time, when this is happening, Saudi Arabia has a lot of US bonds, US government bonds, and same thing with China and a lot of other countries. What do? They're starting to sell off these bonds. They're selling up, they're stacking up gold now. All these countries, if you research it, their gold reserves are increasing and increasing and increasing, and they're selling off the US dollars because they see that it's going to be worthless. Nobody wants to have it anymore. What do I want to say with this? What I want to say with this is that US is, of course, aware of all of this and has been for a long time. And the US government right now is in a desperate state to remain in power, to remain the world dominant, powerful country. And it's not looking very good for them. So all these one way for them to remain there, and they understand also like US dollar will lose value, all of this. So US dollar will, like inflation will skyrocket, and we will have hyperinflation. US will experience hyperinflation, but not only US, of course, Europe as well. Trust me, Europe is in no way better, like maybe even worse. So I'm digging into Europe now, but it was easier to find information about US. That's why I'm talking about US now. But we have very similar monetary policies, except for our central banks are not privately owned like the Fed is. So with all of this, you guys got to understand there's a lot of fear out there. US dollar is not looking good. Gold is pumping, or it dropped actually today. But it is pumping because of this, because more and more countries are starting to stack up gold as reserve currencies. And when you understand all of this, that's when you understand what to invest into. Another thing, if you want to trade oil, sell, go short on oil, because same thing, like oil is the opposite of gold. So oil will actually drop in value. Oil is the black gold, but it's very tied to the US dollar. So yeah. Guys, do we have any questions on this? I feel like I'm rambling and pushing out a lot of information. I hope everybody understands this. I said to my family about 2 months ago that dollar will disappear soon. Seems like all of it is coming true. Yes, Rio, that is true. That is true. And I want to get back to Tano. I suggest to watch the movie The Big Shot, and y'all see what happened in 2008. Yeah, so let me just quick mention on that. 2008, similar thing happened. How did we solve it? We printed a lot of money. We didn't solve the problem. We put out some fake laws. I'm saying we, as I'm a US citizen, but it feels like it affects me as much as a US citizen. And like I said, my mom lives there, so anyway, so they came up with these fake laws to like solve the problem, and like everything is like the holes are sealed now. This cannot happen again. And we all know, like, basically the greed of Wall Street fucked up the whole system. And behind all of that, you will find BlackRock and their super AI trading bot called Aladdin that holds like 20 trillion US dollars in assets. That is like that is the entire GDP of the United States of America. So if you ever want to put a good pitch on AI trading, you can tell them that a big part of the world is run by AI actually. And they didn't solve the problem. They just printed a lot of money. They bailed out some banks. They let Lehman Brothers and some other ones go under. And by printing and all what they didn't solve the problem. All they did was they pulled the problem under the carpet. But the problem doesn't just stay under the carpet. It actually grew under the carpet and became bigger and bigger. So now we have a mountain of stinky, shitty bonds, securities, banks, and whatnot that is about to fail. And who's going to save the day? How are we going to solve this problem? Like, Fed is trying to do some monetary policies, but it's difficult. So we will see a major recession. And by that we will see a major, like what we see now is nothing. We will see a major recession. The whole financial system has to reset. Go back to zero. And when that happens, a new world order comes. So I can mention quickly crypto. So what will the alternatives be? Of course, crypto is a super good alternative. Only problem is that when everything falls down now, when you will see everything crash, crypto will also crash with it. After that, I think Bitcoin will be the fastest one to bounce up again, because people will realize that it is the safest way to store your money, a store of value. And you already seen it a little bit by crypto pumping now in these times. US government is pushing to legalize USDC. Oh shit. US government coin. Yeah, exactly. Don't know. Have they done it yet? Are you talking about CBDC? CBDC, central bank digital coin. Because that one, yeah, that is all. Yeah, exactly. So that one is already passed. It's coming. I think it's June or July. Maybe you know better, Rolf. But it's coming in June or July. So yeah, it's true. And when that comes out and everybody's forced to use CBDCs, then I don't want to say America, but Europe also is fucked, because Europe is also already has some of these CBDCs ready, but the European version. All right, guys, that's it. I just wanted to put how can I say, spread some information and awareness of what's going on in the markets, and so you guys know how to react to certain stuff. Watch the video when it comes out. I won't probably manage to make it till tomorrow, but Thursday I'll try to have it finished and out. After that, I'm doing a video on the BRICS nation. Very important, that as well, because when you know all of this, then you know what to invest to, what to not invest to, what to short, what to long. And remember, in recessions, you don't only make money on investing on the right stuff, because sometimes you don't know. Sometimes it's very difficult to understand what is the right stuff. Even Robert Kiyosaki says this. You need to diversify. So in recession, let's say you know 5 different things that might have the possibilities to pump. Bitcoin, gold, silver. Silver is very good. Other stuff. Spread out your risk in all of these. So we want to be recession proof. We want to come up on top of this recession. And trust me, all of my affiliate marketers here, you won't even have to shout out to people that you're doing affiliate marketing. People will run to you and ask you how can they do what you do, because they want to make money as you do. Guys, thank you. Have a blessed day. And I'll see you guys in the chat. All right? Take care. Bless.